Welcome back. Now we will be discussing module 4. Module 4 is liquidity process. What is liquidity process? We have seen what is liquidity, how quickly an asset can be converted into cash, that is called liquidity process. Here we are specifically talking of trading and settlement. As you can see the first slide, trading and settlement. So we are talking of trading and settlement, how a stock market is in secondary market is settled, how the trading and settlement happens. That is what we call liquidity process. Till now we have seen up to module 3. Module 3 we saw capital market generation process. So liquidity process. Let's now go. Target audience as always BA, BCom, BSc or any graduate, house managers, anyone interested in enhancing their finance knowledge. As always, two things that are required. One, common sense, basic English meaning. That's it. As long as you have that, you will be able to understand anything and everything, particularly on the finance concept. It is very simple and easy. Takeaways. What is the takeaway? Liquidity process. What is liquidity process? Trading and settlement, as I tell. We will understand what is trading, what is settlement. Then investments, 4-dimensional view. You remember we saw in module 2, 4 dimensions. Once again we will make a visit to that and see how, now that like we have incorporated certain amount of knowledge and you would have absorbed those knowledge. Now after absorbing this knowledge, let us once again review it and see where we stand, whether we accept or whether we agree or agree to disagree. Then basics of financial planning. Okay, just a very simple basics of financial planning. So liquidity process. Before we go into that liquidity process, slide 4, as you can see, trading liquidity process, I have put this deck, but before that, what is trading, what is settlement? When I ask people, most of the people are not able to explain me what is trading, what is settlement. They say trading is this, settlement, forget about stock market and other thing. Even in real life, we do trading and we do settlement. Let's think of an example. Let's say you go to a vegetable market. You ask what is the price of a vegetable. Let us say somebody says that it is 1 kg is 100 rupees. You say that no, I will give only 80 rupees. Then finally you both agree and come to a conclusion that 1 kg for 90 rupees of that particular item or commodity. This is what? This is trading. What is settlement? Settlement is actual exchange. You pay the money and that shopkeeper or the vendor gives you the product. That is settlement. Think of Ola, Uber and other things where we go by Ola, Uber. You book Ola or Uber, location A to location B. So what is it? And they give you the price, they do a searching and all those things and they give you a price. That is trading. Once you know the price and you sit in the cab, that is you are then that is exchange. Basically you are being dropped to the other place, that is settlement. So basically in real life also what we do is trading and settlement. The only difference is trading and settlement happen so seamlessly and simultaneously that we don't appreciate that there are two-step process involved. Whereas in stock market it is a two-step process which is clearly visible. Why? We will understand. As you can see in the picture, we will go one by one. Investor A is there, his broker or her broker is broker B1. Okay. So then there is another investor Z is there, his or her broker is broker B2. Now investor A does not know investor B, investor Z, and investor A does not know broker B2 or any broker other than broker B1. So now investor A wants to buy 100 shares of company X at rupees 2360 rupees. That is the price it is quoting now. So now what investor A will do is, he will go and tell broker B1. Today everything is done through mobile app or various app. When we say we do, earlier it was through telephone, now it is we place the order in the broker system. Enter that 100 shares of company X at rupees 2360. Then the order is sent to the stock exchange. Then what happens? Simultaneously at the same time, now our investor Z sitting somewhere else. Let us say investor A is sitting in Kanyakumari, investor Z is sitting in Kashmir. Okay. So investor Z wants to sell the same shares of X at rupees 2360 or any rate that is best rate available. So investor Z finds that best rate available is 2360. She then tells her broker or places in broker B2's terminal or system or whatever you call, enters the order or calls telephonically the broker office and tells that sell 100 shares of X 2360 at this price, 100 shares at the same price. So please understand, if investor Z is selling instead of share X some other shares, this will not match. Because why? Because company X is different from company Y. Example, Reliance is different from HDFC Bank, or HDFC Bank is different from ICICI Bank, or within each person is different, right? Each company is different. So hence, so the same company, same price. Then the moment the order is entered in the stock exchange, then the order is matched. These are all done electronically, automatically, seamlessly. In the contract note, there will be a contract note that will be issued to both both investor A and investor Z through their respective brokers, that is B1 and B2. So the contract note will give the exact time with seconds also. So hence you can see that everything is through automated mode. Now the order is matched. Once the order is matched, this is called trading. So trading happens in India at present now from 9:15 AM in the morning till 3:30 PM in the evening. Okay. So during these hours, anyone can buy or sell any shares that are listed either on NSE or BSE, National Stock Exchange or Bombay Stock Exchange, any shares that are listed over there during that market hours. So now this share, now they have entered these shares, order is matched. Once the order is matched, what is the next stage? Trading is done. Now what is the next stage? Settlement. What is settlement? Now A has bought the shares, that means A has to give the money. Z has sold the shares, that means Z has to get the money and Z has to give the 100 shares. Correct? So this whatever this order matching happens, this is called T day, trading day. That is, let us think of an example of let us say it is a Monday. So it is called trading day on Monday or Tuesday, any day. So now next we will go to the next slide, T plus 1 day. That is, let us say if the trading happens on Monday, T plus 1, let us say it is on a Tuesday. So now what happens Tuesday? Investor A has bought the shares. That means investor has to pay the money to the broker. Why he has to pay the broker? Because as you can see, clearinghouse corporation comes. In the earlier slide, again I am going to the earlier slide, you saw stock exchange. Whereas I come back to slide 5 where you are seeing only clearinghouse. Why clearinghouse? Because there is a clearinghouse that is involved in the settlement process. So it knows only the broker. So all the brokers, it will not know the investors. So broker B has to collect the money for the shares that investor A has bought. Of course, broker B will add his brokerage also and collect that much of money from investor A on T plus 1 day. That is, if the trading has happened on Monday, this will happen on Tuesday. Simultaneously, same day on T plus 1 day, parallelly, what will happen there? Investor Z, investor Z, he has sold the shares, right? That means he has to give the securities, shares of 100 shares. Where he will give? The shares are settled in the depository, which you have discussed in the capital generation process itself. So he will give an instruction to his depository to debit his account of 100 shares of X company and transfer the shares to the broker B2, whose clearing member account. So broker will maintain two accounts, one an individual account like you and me, that is separate, and clearing member for clearing this, facilitating this movement of shares and transferring it to the customers and to the clearing corporation or to the other brokers. So that is called clearing member account. So Z will instruct his depository participant to debit his account of 100 shares of X and transfer it to broker B2 pool account. That is called pool account or clearing member account. So now the shares are transferred over there. Here the funds are gone to broker B1. This happens on T plus 1. At the same time, in the morning of T plus 1, the clearing house will give settlement obligation to all the brokers. So in this case, broker B1 will get a settlement obligation. That means the broker has to settle, B1 has to buy the 100 shares of X, he cannot go back. He cannot say, no, I will not buy this. No, he cannot say that. Okay. So, we will discuss that a little later. So, broker B will get an obligation to buy the 100 shares of X shares, and broker B2 will get an obligation to deliver the 100 shares of X. So, this is the function performed by clearinghouse and also facilitating the movement of money and shares. This is called settlement obligation of B1 broker and B2. Once this is done on T+1 day, on T+2 what happens? Now the investor A will get the securities from broker B1 his pool account, because broker B2 would have transferred from his clearing member account to the broker's B1's clearing member account. From there it will be passed on to investor A's depository account. So, he will get a clean credit. So, parallelly what happens, broker B2 would have received the funds that B1 has transferred to the clearing corporation. So, broker B2 will get the funds and he will deduct his brokerage, and the balance amount he will credit to investor Z's bank account. Here it is depository account, there it is bank account. On T+1 day it was investor Z's depository account, investor A's bank account, right. So, now the investor A gets a clean credit of 100 shares of X on T+2 day. This is called settlement. So, do you agree that it is seamless, it is faster, and hence liquidity is the highest? I am sure now you will agree why I said liquidity is the highest in equity, because it happens seamlessly. Whether you are in Orissa or you are in West Bengal or you are in Gujarat or anywhere, any part of the country you might be there, east, west, north, south, regardless of it. Trading happens, settlement happens on T+2. Settlement obligation is given by the clearing corporation and the obligation is taken by the brokers, not by the individuals. So, after having a good understanding of liquidity process, secondary market, how trading and settlement happens in India. So, one thing all of you has to be aware is that India, we are well ahead and far ahead of many other world trading systems, and we are much superior system. That is why SEBI has done a fabulous job in moving to T+2 and even now thinking of T+1 settlement. Okay. Now, one question, I want to end this trading and settlement with one question before we go into the next topic within this, 4 dimensions, reviewing it again. So, one question, whether should I need to go through a broker or can I do privately and all those things. So, SEBI does investor education thoroughly, and I through this video tell everyone, request everyone, any investor, any individual, students, please go through only through an authorized broker. Why? Because if you go through an authorized broker, as you have seen that the settlement obligation is taken by the stock exchange, the clearing corporation, and broker is responsible for the settlement obligation. So, you buy a shares, you will get the intimation with the seconds time, okay, broker stamp, okay, with the date, time, and we including the seconds. Hence, no, you will get the shares that you bought or you will get the money back, which is why very important that you go only through an authorized stock exchange. Any other trades are illegal, okay, don't venture into it. But of course, sometimes people might do off market transaction where two parties can privately transact between them, but again there are many restrictions and other things. Please do not venture into it. Always trade through a recognized stockbroker, registered stockbroker with SEBI. SEBI is also mandating that. So, definitely that will save you, because after all it is your hard earned money. With this, we will go to the next topic of investments 4-dimensional view. Once again we will see cash. Now you will agree there is no risk in storekeeping cash, excepting that safekeeping of that money somewhere. Returns, there is no returns. Inflation, negative, high. Gold, again the same story. Now I am sure you will agree. Bank deposits, low interest, low to negative, highest liquidity. Real assets, I am sure you would have now agreed. Hence, no, please be wise in your investments. Real estates, yes, you can invest, but please be wise. Medium, rent you get if it is building, and rewards, again lowest. Equity shares, As you can see, high, dividend, highest and liquidity high. Corporate debts, liquidity you saw, right, high. In fact, I can say highest. Why I have not said highest? Because certain stocks are there. Many people are buying shares where there is no liquidity, where there are no buyers and sellers. If you unfortunately happen to buy the shares and hold it, and if you want to sell, you might not find a buyer. But the top 100 or 200 shares, any day, any time you can sell, just like that. Like how you want to buy, how you can go and buy a toothpaste or a shaving cream or a soap or anything, you can just like that buy or sell shares. So hence the 4-dimensional view, once again I place particularly on the liquidity aspect. I am sure by now you will agree the liquidity of equity is high and corporate debt is low to medium and government securities is low, and again mutual funds is high. Why? Because of open-ended and closed-ended fund. Open-ended at NAV price the mutual fund buys, and closed-ended fund it is listed in a stock exchange. With this we will go to the last slide. It is a basic of financial planning. See, I want to state once again here that I am not a SEBI registered financial planner or investment advisor or research analyst. Hence, I cannot give you a comprehensive financial planning or anything. Just I am explaining the concepts, that's all. So, anybody in the age of 20 or 21, if she or he starts their career, they should think of these lines, on these lines. As you can see, the pyramid is going down. I have put it in a reverse way. You might wonder why I have put, because it is the order of priority. First and foremost, what you have to take is health and medical insurance. Why? As you all know, Corona has taught us that if there is a medical emergency that is coming in, the cost is exorbitant. Hence, everybody needs health and medical insurance. Step 1, anybody in financial planning, they should think of health and medical insurance. Once that is done, then they have to take life insurance, term insurance. You can take with any insurance company of your choice, but take term insurance first. What is term insurance? For our vehicles we take. Every year you take the insurance. If something happens to the vehicle, the insurance company will give. If nothing happens, there won't be any money given by insurance company. Same way, term insurance, with minimum amount you get a very good coverage. But unfortunately, many people are not aware of it. They go and take many other policies with insurance companies. I would suggest first is that you take term insurance. Then you can think of other policies if you want. But first is term insurance, because you will get a very good coverage for a very small premium. That is next. Then you can think of pension plan. Why? Because future is uncertain. Because of the scientific invention and innovations, human life has become longer. That means the longevity of life is there. But the earning potential stops at the age of 55, 58, 60, or certain people even much before. Hence, we don't know how long we will live, but we require money. Hence, pension plan is something which is very, very good. Think of a good pension plan, discuss with your investment advisor, or go deep into each of the pension plans and analyze and go for the best plans. Then you go for mutual funds. Invest in mutual funds, which will give you a very good corpus at the end of your retirement and other things. Then if you have interest, you can go on your own and do equities. For small investors, if you don't have time, if you don't know things, if you don't have the knowledge, don't have the patience, please do not do investments on your own. Please go to a mutual fund. There are professional fund managers. They are very good. Many of the mutual funds are doing very good jobs. Please select one of the best mutual funds or take advice from your investment advisor. She or he will guide you in selecting a good mutual funds. Go and invest in mutual funds. Even after that, if you have interest, go and invest on equities. Anyway, in next module we will see how to go about investing in equities. Then go for real assets. After all those things are there, then you go for other assets like your gold and other things. I am sure that this basic of financial planning, every individual, particularly those who are starting their career in the age of 20s, should think of and develop a sound financial planning. Thank you very much. Friends, welcome back. If you recollect, in module 4, liquidity process, where I have discussed about trading and settlement. Trading and settlement, particularly I told in India we have T+2 settlement, and I have explained in detail extensively about what happens on trading day, that is T, settlement equal to T+2, S equal to T+2, trading day what happens, and T+1 what happens, and T+2 what happens. So now I am happy to state that India has moved into T+1 settlement. That means liquidity is super fast. That means you sell on Monday, Tuesday end of the day, the funds will be in your account. Is it not great? Every Indian should be proud of. We have to thank SEBI for that. That's number one. Number two, while I have explained in the concept T+2, conceptually there is no change excepting that certain activities done on T+2 day will move into T+1. So hence please consider this as a addendum video. However, the concept does not change, hence we didn't want to put another video changing the entire video. So follow the same cycle, because till now T+2 was happening. Globally also it is T+2, excepting in China where partially they are having T+1. Hence have a good understanding of T+2, but please understand that India has moved into T+1 and many of the activities on T+2 activity will move into the T+1, but conceptually the process and the concept remains the same. Thank you very much.